The broadcast is now starting. All attendees are in listen-only mode.
Hey, good morning, traders. This is Blake Morrow with ForexAnalytix, and you were listening to the Face webinar. I hope everybody's having a great trading session, and happy Thursday. I think today is going to be a little bit of a consolidation ahead of tomorrow's big Fed chair speech from Fed Chairman Powell. So, I think today is going to be all about um, preparing for that. So let me first and foremost, for those of you that were probably wondering about yesterday, uh, my sister did have a baby last night, brand new baby boy. Um, it happened just as I fell asleep last night, so I didn't get to meet the little guy. We planned on not being there after yesterday because it was such a long day for them that we planned on going to see the baby this morning. So, or today, anyway. I don't know about this morning, but anyway, happy, healthy. They all turned out great. And the coolest thing about all of this is that baby Maverick and I share the same birthday, and that is truly a blessing. It's going to be awesome. And the reason why I say that is because my sister, who is significantly younger than myself, Steve met her when we were in Greece a few years ago. She came on our family trip. She's significantly younger than myself and has been a wonderful aunt to my kids. She was there for the birth of both of my children, and I'm happy to pick up the torch and continue on the tradition of being a great uncle. So I'm really excited about all this. Anyway, that just a little bit of an update because what's that?
Since you mentioned me, congratulations,
Oh,
congratulations, congratulations.
thank you, Steve. I appreciate it. Yeah, really happy. And I don't want to talk too much about it. I just wanted to mention that because I know some of you were probably wondering, because yesterday was a little bit of a long day for myself. Not as long as my sister, but she was in labor for like 15 hours. But I did get up early in the morning to go pick up her dog, and so it was, we were just kind of waiting all day. But no, like I said, nothing compared to what my sister had to go through. And thanks, Steve, for the congratulations. We have, like I said, tomorrow, and let's get over to the markets. Tomorrow is going to be a big day for the dollar, in my opinion. Tomorrow is going to make or break the dollar. Now, everything that I've read, and let me grab this because I need to get this for you guys. We're going to do the bias chart and set that up. Go through all the majors here in just 1 second, but I need to talk about what's happening for tomorrow. So tomorrow, with everything that I've read, every bank report that I've viewed over the last thanks Kareem and Dinesh, appreciate it. Everything that I've read, all the bank reports, everybody's expecting a pretty hawkish, or let's put it this way, not dovish Fed chairman speech tomorrow. Remember, the Fed Chairman Powell is speaking tomorrow at the Jackson Hole Symposium. So he will be speaking in it, which actually starts today. He'll be speaking at 7 o'clock my time, 10 o'clock in the morning Eastern time. So he's delivering a speech entitled "Monetary Policy in a Changing Economy" at the. Oh no, I'm sorry. Oh yeah. Changing Economy at the Federal Reserve Bank of Kansas City Economic Policy Symposium in Jackson Hole, Wyoming. So he'll be speaking tomorrow. I was like, Kansas City Fed must be Kansas City Fed sponsored. Anyway, regardless, he's speaking tomorrow at 10 a.m. Eastern, and that is going to be the market mover. So tomorrow we're going to be meeting at the same time here, obviously, with a little bit better idea on levels ahead of the Fed speech. I expect, and let me just tell you what I expect for today. Can I draw it out for you? Okay, this is an hourly chart of the euro dollar. You know what I expect today? I expect this. Duh, 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 duh. That's what I expect, right? That's basically it. For today, I think we're going to come right back down to 115.50, and then maybe even probe a little bit. Here, let me delete that. So maybe even probe a little bit down here, and then do this. Okay. And as we set up for this head and shoulder pattern, because really the pair is going to figure out if we're going to invalidate this or validate it tomorrow. So in other words, we should, if I'm correct, and by the way, many of you guys and gals have been listening to my analysis like this in this type of format for north of 10 years. Some of you, as long as 15 years. When I first started broadcasting via a radio show back in 2003, 2003 would be 2003. 2003, I think, is when the Morning Edge first broadcasts as a radio show. Anyway, and you guys know that one of the things that I think one of my strengths. Look, I've got plenty of weaknesses as a trader. They're not all strengths, but one of my strengths has always been able to anticipate the market. How you execute your trades is that's where the tricky part comes in my opinion. But I'm really good at anticipating what I think is going to happen. A lot of times things come to fruition. What I do believe here, just factoring in all the information we have in front of us, is that we're probably we're stopping shy of this big resistance, obviously. Big resistance at 116.20, and then we're going to pause here on the support, waiting to figure out what's going to happen tomorrow. Now, if the Fed chair is hawkish or just not dovish, okay, if the Fed chair really reinforces the idea that we're going to be raising rates next month and then probably another time in December, then the euro probably will come under some pressure. We're probably going to start to fulfill this inverted head and shoulder pattern. The flip side to that is if the flip side to that is if the Fed actually is the Fed chair is actually dovish, and we get the feeling after listening to him speak that seeing another rate hike in December may be questionable, which guys, I don't want you to think that that's out of the realm of possible tomorrow. Getting a rate hike next month seems it's a slam dunk. It's everybody expects it. But if we walk away tomorrow going, we're going to get a rate hike in September, but going into the end of the year might be a little dicey, whether it's political risks, trade war risks, or other risks that may be accentuated by the Fed tomorrow, but the Fed chair, more importantly, then we could very well break 116 and then start to challenge all this resistance here, and if that happens, man, we could really squeeze higher. I'm not a euro bull. I'm not. I really am not. I'm not a euro bull. My issue that I'm taking up is more of a dollar issue, not necessarily a euro issue. This is just the way I will trade, or maybe in other words, the way I would express the dollar weakness would be in the euro, but there's other pairs that I could actually do that with too, which would be maybe the cable, for example, but or maybe even the dollar yen, but the euro dollar I'm just showing you since it's on my screen, and the setup is there. I think the setup is very clean. So anyway, the euro dollar, I think, is going to make its decision whether we're going to play into this head and shoulder pattern or not tomorrow. So what does that mean for us today? Well, that means for us today that we should probably be, just prepared for some sort of consolidation. As you know, if you were listening in to the, or listening in, I'm sorry, if you were a ForexAnalytix subscriber this morning, you know, my basic technical analysis this morning was pretty simple. This was an hour and change ago before the euro popped. Okay, here's the euro dollar before it popped up to 115.85 or wherever the hell we went. The euro dollar could be setting up an intraday head and shoulders pattern with Fed Chair Powell set to speak tomorrow. The rally in the euro dollar could stall today at the 116 level. A hawkish or just not dovish Powell could send the pair lower tomorrow morning. However, if the chair strikes a dovish tone, the euro dollar could clear 116.30 and really initiate a big squeeze higher, invalidating the setup. And that was written an hour, actually it was more like an hour and a half ago, since our automated platform only updates. It doesn't update like, oh, this was updated 1 hour and 42 minutes ago. It rounds. But what I'm trying to point out is I think today we've got to be prepared for this. Now, did I short the euro at 115.90? No, I didn't. I was actually telling everybody in our chat room I was waiting for 116. It just never got there. If the euro dollar gets to 116 today, I probably would short it, just because I think the risk is manageable up there. You know, obviously if it breaks 116.30, you know you're wrong. I mean, that's all there is to it. But I didn't short the euro, at least not yet. I would be willing to short the euro at 116. I'd be willing to buy it down at 115.40. So just so you guys, since we're already talking about, let's go ahead and write this down. 115.40 is support. 116 is resistance. 116.30 is key resistance. Okay, so I'm filling out the bias chart for you guys right now. Now we are in a range. Tomorrow we could go bullish if we break out, above here, and and I'm not going to flip the chart to bearish tomorrow. It'll be range, because even if we broke down, even if we broke through 115.40, the risk is really just move down like that, and then we're in a bigger range. You know what I mean? So but the risk in the euro dollar, in my opinion, the bigger risk is actually us flipping bullish. Is the euro dollar actually breaking through resistance and really turning this whole thing around, this whole move. This is an hourly chart. I should probably put it on like a 4 hour or something. The risk is really flipping this thing around and turning up towards 120. That's the real risk, in my opinion. I'm not long the euro. I'm just telling you guys my thoughts. And by the way, I forgot, today is Thursday. If you guys are logging in and joining us from investing.com, welcome. We do this webinar every single day. At the same time, same link that you just used, so you can listen in every single day. Dale Pinkert, which is on Twitter, if you know him, he's a Forex Stop Hunter. He's usually the host, but he's out for the next week and a half as he's enjoying some, well-needed vacation. It is 5 o'clock in the morning here, and I've been up for a couple hours. So if I give you a yawn, it's and plus yesterday was a long day. So if I give you a yawn, it's that the reasons why. Okay, now let's go to the pound, because this is the pair that I'd actually prefer to play a long in. Now, I am not long the cable. Okay, I'm not. Let me explain to you why I'm not at the moment. I sold my cable exposure yesterday. If you follow me on Twitter, you probably know exactly the reason why. We basically hit a major downtrend line. This is from the double top that was, April highs over here, double top. We completed the double top, then, bounced a little bit, and I'm drawing all this out for you guys. So, we got a double top, right? Double top, extended that double top perfectly, bounced. This bounce was only a 24% retracement. And at that time, if you guys were listening in back then, I said, hey, very shallow retracement, only 24%. Chances are we're going down again. We have gone down again. And now we, obviously overexerted ourselves to the downside, and we're bouncing. Now, question is, what happens from here? Well, as you know, if we break, if you were listening in yesterday, you know this. If we break this 38% retracement, we broke it yesterday by 5 pips. That's not, or 6 pips. That's not breaking it. A sustained break is when you spend hours and hours and hours above a key level or below a key level, and then that will, to me, constitute that this breakout is for real, or at least a very, 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 very high probability that it's real. Yesterday we spent, I don't know, a few minutes above 129.30. We tried to do it again and then failed. Okay, so this is obviously key. Why is that important today? Well, it's important, at least today and tomorrow, really more importantly, is because I know that that we all know, that everybody knows, that this is really key resistance here. Okay, which I'm going to write down. See how I'm see how I'm so smooth and just kind of marking down these levels? Oh yeah, you guys didn't even know it was coming at you, did you? Just key resistance.
Somebody's in a good mood today.
I am. I'm an uncle today. Yeah, I'm pretty excited.
Yeah, exactly.
I do have a headache, believe it or not.
That does look like a bull flag a little bit, though, doesn't it?
It does, and this is talking about playing the dollar short. My preferred trade is actually the cable. I think that I'm gonna. I heard Stelios chuckling there, but I have talked with him the last few days about the idea of, I think that the Brexit negotiations are going to be just fine. I think that a lot of this rhetoric about possible hard Brexit, blah blah blah, it's just negotiating tactic. It's like, oh well, you should be scared because we know that the worst case scenario is upon us. We're prepared. So screw you guys, EU. I think that's just all it is just the UK playing a little bit of hardball. I think everything is going to end up being fine, and so the pound, I think, is going to be a great trade to reflect that. Should we see dollar weakness? Now, I am not long the cable just yet. I think that the pound on dips, especially to this spike high right here, which is 128.50 or 25. 128.30. It's going to be very well supported. If we get down there, I'd be a buyer today. If we spike down there, I'd prefer. And you can see, if this is a bull flag, even if we do this, I'd play it. I'd play it and hope that the Fed chair would be dovish tomorrow. I don't know what the Fed chair is going to say tomorrow. I mean, my assumption is he's not going to be dovish. My assumption is he's going to be, he's going to, maintain, pretty much stay the course, and it's not going to create a whole lot of volatility. But you don't know until it happens tomorrow. So, I'd like to be nicely positioned if we got a dip to 128.30, get long, and then it goes mid-range by tomorrow. We get right back up to 129, and then you get lucky, and he gives us some sort of dovish commentary, and you get the pound breaking out. So I just don't think it's going to break out today. But that's how I'm looking to play the cable right now. Okay. All right, let's go over to the Aussie. Now, the Aussie, just so you guys know, I was long the Aussie New Zealand. I got taken to the woodshed last night. The Turnbull's contest of leadership is really taking the Aussie a turn for the worse. So I got stopped out of my Aussie New Zealand last night when it broke through the support. Our pattern and play got invalidated, and you guys can clearly see the reason why. The fact of the matter is, hold on really quick. Let me do something really fast. Okay. The fact of the matter is with the Aussie is it is extremely weak. It looks weak on all crosses now, and we are actually testing some support here. This is the previous neckline. I actually think the Aussie can move lower. Whoops, that let me no. Sorry. Stop.
I usually just refresh the page, otherwise he will not go away.
Oh,
I don't know what's happened.
Yeah, something's changed as of late. But thanks, Stelios. I appreciate it. So we're testing the neckline. So of the Aussie right now. So the question is, how far down can we go? And I actually like the Aussie as a short, not necessarily the Aussie dollar. I like other currencies. Like the pound Aussie long, the euro Aussie long. I think those are the better trades because the dollar is a little bit more of a wild card right now. And if you guys don't know why the dollar weakened earlier, it's because President Trump really he didn't threaten the market, but he did. He's like, what if I get impeached? The market's going to fall apart. More of like putting the idea, not like the idea is not in the mind of Democrats anyway, but of the market, but really making it is maybe a little bit more of a possibility that we start going through some impeachment hearings in the next few months. And the dollar didn't take kindly to that because and by the way, I happen to agree with the president. If he is impeached, the stock market is going to absolutely get punished. We will lose all of these gains that we've had for the last year and a half, 2 years. So, and I think the dollar was like freaked out the dollar a little bit as a result. The equity markets didn't care, but the dollar did. But if the dollar does strengthen following tomorrow, because forex traders have a great deal of ADD, then we're going to focus on Powell and forget what Donald Trump had to say today. Going into today anyway. All right, so the 618 here comes in at 72.71. I got to do this. I got to 72.71. I got to get this analysis done. I really am falling behind. Any type of rally back up to 73.75 should find resistance now. 0.7375. We are range, or actually I should probably put we're in a bearish trend still in the Aussie. The Aussie's really this rejection here after the inverted head and shoulder pattern completion. That's pretty bearish that we couldn't move up. Okay, Kiwi. Kiwi had a really key rejection of the upper end of its resistance yesterday. Kiwi is actually sitting on some support here. 66.55 is probably support. I bet you that's a 38% retracement. If I had to guess, it is. It's actually it's exactly the 38% retracement. Yeah, that's pretty good. All right, so support 66.55. 0.6655, resistance key at 67.20. No questions asked. 6720. That's resistance. I think the Kiwi might be more in a range, but actually it's still in a bearish trend too. It still is. And remember, the cable can turn bullish if we broke that 129.30. It would flip from bearish to bullish, but not right now. US dollar Canadian range bound. We did break through 130 briefly. Like I told you guys yesterday, have fun trading the Canadian because I ain't doing it. We're in this channel and it's being respected. So support right now is 129.90. Below that, it's going to be 129.50. Resistance is 130.55. We get above 130.55, and that could turn us back up towards 131 and change. So 130.55. It's very minor resistance. We are in a range. Okay, let's go over to the Swissy. So here's the Swissy. Swissy, big rejection actually. So we broke through the support. We rallied back, stopped at that resistance. So now that's key, 98.55. 98.55, that's key resistance now. And then support is 98.08. So 98.10. 98.10. Bearish. By the way, we do have, in just a few minutes, we have unemployment claims and corporate profits. Oh, it's interesting. Forex Factory, which, by the way, I'm not a huge Forex Factory fan, as far as they don't give me enough data here. But I like this setup. I like the visual setup. It's good. But their unemployment claims, they finally turned that to yellow after being orange for years and years and years. It's like, oh, you finally understood that unemployment claims hasn't mattered for the last several years. So they finally figured that out and put it, because unemployment's full capacity and it's not moving the market at all. Hasn't in a long time. Give me 1 second. Whoops. Okay. So dollar mex. So the dollar Mexican peso, we broke lower yesterday. It could be, and I was surprised actually. You guys remember my comments from yesterday probably about, I thought Mexico would come in with a little bit of more of a hardball stance. Yeah, they didn't. They basically, said, wow, everything looks, in Canada, same thing. Freeland said, oh, everything looks promising. Woo, it's like, come on, grow a pair of balls, for crying out loud. Hit the U.S. while they're down. And I am American. I'm just saying, from a strategic standpoint, it's like, if that the Trump administration is in a weakened state and you've been getting beat up regarding NAFTA, why don't you stand up for yourself a little bit right now, because you have the upper hand. But no, that didn't happen. Both Mexico and Canada said, oh, great, we're getting close. So anyway, peso just drifting lower. I don't know. I mean, until we get some sort of significant NAFTA news, I don't know what to do here. We're past the 618. Channel support may come in around 1866. So we'll write that down. 18.66. Do you guys am I crazy by thinking that? And KJ said, 9 years listening to me broadcast, I feel like a rookie compared to others. 9 years, KJ. Thank you so much for your support over the years. I really appreciate that. But am I crazy for thinking that? It's like, if you were Canada and you were Mexico, Canada or Mexico, why wouldn't you have yesterday said, why wouldn't you just walked away from the bargaining table? I know there's a lot at stake here, but it's a game of chicken. You're playing the negotiating game of chicken right now. Anyway, resistance at 1890, and like I said, I'm American. I want what's best for us too. I'm just talking from trying to be an outsider looking in standpoint versus my opinion, or versus an opinion of an American, I guess is what way I should state that. All right, hey, we have unemployment claims coming up. Let me just cover that really fast. It shouldn't move the market, but unless we see an outsized print like, okay, there we go. Unless we see an outsized print of, we print 300,000 jobs or 300,000 in unemployment claims, which ain't gonna happen.
Not gonna happen, man.
Yeah, no. I mean, but if it did, the dollar would sell off really fast. But I remember, way back in the day, and this is just a Bloomberg terminal, guys, so you can see the data when it comes out. We have continuing claims and jobless claims right here. Still, I remember no one looked at the Philly Fed back in, it was like 2005 or something, and no one was looking at that data point at all, ever. And I remember it's something like this, and then this is just like, I'm just kind of like, 210,000. It's nothing.
Yeah.
Basically in line.
Yeah, a little bit better than expected. The dollar yen ticks up 2 pips. So what? Okay. But yeah, basically in line. That's it. So I remember I was trading the Philly Fed. It was like 2005, and I was at home. I was about ready to go in the office to do the broadcast, but being in Dallas, it was like 2 hours. The data is like, by the time I got in, the data was going to be released, or it was like after the fact. I was coming in a little bit late, I think that day was. Anyway, I remember the euro dollar was trading, wherever it was trading at the time, but Philly Fed was expected to come in at like 22. It came in at like 40 something. It jumped like crazy. The euro dollar that day dropped like 250 pips because it was such an outsized number and no one was expecting it. And I remember I shorted the crap out of the euro. I made some good money that day, and that's why it's so vivid in my head. But it's one. I think weekly jobless claims are going to be that. Like one day we're going to be sitting there expecting a print of 200K, 215K, 230K, and we're going to get this print of 300, and the dollar is going to move wildly. It'll come, maybe. Who knows? I don't know. Anyway, okay. Let me finish this up, guys, and then I'll hand it over to you. I'll be quick. Dollar CAD we covered. So we covered the Swiss peso, Norwegian krona. So the Norwegian krona is sitting on pretty key support. Remember, this is a big breakout point. If you guys don't recall, it's right here. All right. Comes in at well, it was 833. I'm going to write down 832 now since we kind of probed it. 832. 840, like we wrote down yesterday, same thing. 832 support, 840. There was some comments from the Norges Central Bank last night that were hawkish, viewed as hawkish. That's why the dollar NOK is a little weaker, but still range bound. We need to really break in order for us to start moving lower here. By the way, the cable's coming under a little bit of pressure. The cable's it's giving back all of these. Look at this, all these gains. Just all, we were trading at 129.10. We've come all the way down to 128.73. Probably will bounce around. I don't think we're going much lower than where we're at. We might head down to the 60s, but we should end up bouncing around here for the most part. Okay, sorry. Back to analysis. Swedish krona. $9.03. Back up here, 9.14. 9.03. 9.14. We are range. Actually, you know what? I take that back. We're still bullish while we're above 9.04. And actually, I should probably write that down with the Norwegian krona. Well, this failure here is a little scary. That failure up here, that multi-year trend line, that failure up there is a little scary. The Swedish krona, on the other hand, I guess that butterfly rejection. Yeah, I'll just put it as range right now until we figure things out tomorrow. Tomorrow, we're going to have a much better clue on what we should be doing tomorrow after 10 a.m. Eastern. Dollar yen has had an aggressive bounce. I was pretty surprised about the bounce overnight, but that was mostly due to the renminbi. The US dollar CNH took off last night. You can see it took off, and the dollar yen followed suit. So resistance, 127% extension comes in at 110.95. So that should hold for today, I would think. 95. Support, I'm sure we'll be really well supported on any dip back to 110.50 for today, at least for today. Okay. And we were basically in a range, and the dollar index, now, this is something we should note here. Okay. we held this support. So that support is now key. That comes in at 95. Resistance 95.50. My assumption is we will be trading in this vicinity till tomorrow. If I had to guess, we're going to be right here. Okay. 95.50, 95. Probably don't want to get too carried away, getting too bearish nor bullish the dollar until we have a better clue for tomorrow. Okay. So we are range bound, and I'm going to reiterate what I said yesterday. In the event, okay, and this is just a nice little recovery bounce after several days sell off. In the event tomorrow, if for some reason tomorrow we break here, this will be an extremely bearish event for the dollar. I will reiterate this that we talked about yesterday with Steve here. The dollar index, that evening star formation that Steve pointed out, that shooting star on the weekly count, that's going to be a really, really, really bearish look if we come breaking through this support tomorrow, which there's a lot of dollar longs out there. I ain't gonna lie. There's a lot of dollar longs out there. A lot of people, playing the trade war card, playing the dollar long as a beneficiary. They're gonna get absolutely smashed if we break 94.70 tomorrow. And that, by the way, is really critical support. I could write down 94.70. Asterisk as being really key. All right, guys, your bias chart is finished, and I'm actually pretty tired this morning. If I sound like I'm lacking in energy, is because I am. I'm a little worn out, believe it or not, and I didn't even give birth. Imagine that, Steve, Stelios. How you guys doing? I didn't even give birth, and I'm like, how are you guys doing?
You need some rest, man.
To be honest, it's not by accident. We're not built to give birth, right?
Yeah. Yeah, exactly. And I actually, I would be in much better shape if I was in Port Tahili, Greece, like you, Steve. Nadang asks, hello, how can I have the economic calendar you popped up on the screen? This right here, that's Bloomberg.
$20,000 per year.
Yeah, well, we paid $2,500 a month, so that would be, over 30 grand a year.
Probably you have some extra markets, Blake, because I think the basic package, if I remember, is roughly $20,000 per year. But yeah, that excludes several things that you have to buy separately.
Oh yeah, we have mine costs nearly $3 grand a month. So
yeah,
but yeah, it's my firm that pays for it. So yeah, well, actually, that's not really true. It comes out of my profits. So
we have to say that there are decent calendars out there, and actually in the ForexAnalytix platform we have embedded the investing.com calendar, which is a very, very good one, if you ask me. So subscribers to ForexAnalytix can also on the same platform, because that's what we were aiming for. So you have, with ForexAnalytix, everything you need besides, of course, your broker's platform, and you can find investing.com's calendar there as well.
And hey, I'm going to turn it over to Steve, but Ken asks, has anyone gone over oil and gold? So, Steve, I know you will. I wanted to leave some stuff for you and Stelios. Hey, and I want to welcome, or I want to say thanks everybody for visiting the webinar today. Remember, if you like what you saw here, make sure you visit Forest Park FX. They are they'll basically they're the broker's broker. They'll help you find a broker that will suit your needs the best, and you can get ForexAnalytix through a reimbursement program if you use one of their brokers. So make sure you contact them. There's a Skype and email address right here at the bottom on the ForexAnalytix reimbursement program page. So all you have to do is click on this link right here and it takes you to this page. All right, guys, thanks for listening. And I'm going to turn it over to my colleagues, Steve and Stelios. And
thank you, Uncle Blake.
Hey,
Thank you.
thanks.
Congratulations.
Thanks, guys. Really, really excited and happy. So happy everybody's healthy and healthy, and 10 fingers, 10 toes, all sorts of stuff. So
yeah, that's what matters.
It is. All right, guys.
Steve,
have a great one.
Steve, before you kick off with analysis, I just have one little thing to say about Jackson Hole and the Fed. There was actually a headline just a couple of minutes ago where Esther George of the Fed said that she doesn't let Trump influence her votes on rate hikes, which is interesting. And it goes back to what you have said. And, many people have said that they shouldn't really be affected. And if they are, people might interpret it as as Trump dictating what the Fed's going to do. So they want to avoid that. Now, I have to say one thing. Tomorrow, I think Jackson Hole will be should bear no surprises. I mean, I don't see what's changed. But I have to say this. The reasons for Fed members to start being more cautious are increasing slowly. So you have things like trade wars continuing. Today was today took effect. It was some of the tariffs between US and China started taking effect. All this is going to start working through the economy, both economies. And, you have the continuing NAFTA negotiations. You have all these issues with Trump and his lawyer and, all the people associated with him who are going to prison or pleaded guilty and all that. So,
to be honest, the list of people that Trump has been associated with that are either going to jail or under scrutiny that might lead to that is growing by the day, right?
It is, yes.
I mean,
and the last thing
it's not fun anymore. I mean, it's not a joke.
Yeah. And the last thing they want is for the government to be in danger, and for whatever might happen as a result, So I think they do start having reasons to think about slowing down the pace. I don't think they will do anything tomorrow or in the September meeting, but after that, I think all bets are off. Anything can happen, So especially with the pace that things are developing. So I always have this in the back of my mind. I look at what the market's pricing, which is almost 2 hikes this year and 2 more next year. What do I think the risk is? Well, I don't think something's going to happen. I can't see what will happen that will make them more hawkish. Only inflation ticking up a lot. That's what I think will make them become more hawkish. But otherwise,
that's very true. And to be honest, inflation is an ongoing risk. But as I've said before, because I've been foreseeing this as a possibility. But when I ask myself the question, let's assume that we have inflation accelerating higher, and at some point sooner rather than later, even by looking at how far we've gone in this business cycle and in this bull run, I don't know what the catalyst is going to be, but sooner or later we're going to have a downturn at the economy. And then I'm asking myself, if the Fed has to fight at the same time inflation or a downturn in the economy, which of the two you think they would focus on?
Well, theoretically,
they're supposed to focus on inflation. Yeah,
yes,
I know,
but they won't.
But they won't. Yes, their mandate supposedly has nothing to do with economic growth, right? Yeah. I mean, they're supposed to be taking care of price stability and employment.
And employment, exactly. Yes.
Yeah, of course.
What really gets me is how the market just doesn't care. Like equities did nothing yesterday or the day before with the Cohen developments. And like Blake said, Trump said that, if I get impeached, the market's going to crash. Yeah, it's likely. But shouldn't markets price in a little bit of a probability of Trump getting impeached? At the moment, they should. Right? This is getting bigger and bigger. It's not a 50-50 event, but it's, 10, 15, 20%. I don't know what it is. Shouldn't the market be pricing this? It seems to be just completely on a different planet, equities.
Now, I just don't on the other hand, which isn't a surprise, personally speaking, okay, let's say that I'm the president and there is a chance that I'm going to get impeached. Why make that statement? I mean, I wouldn't ever make that statement because it sounds a little bit like, if it comes to that, I would suggest you don't impeach me. But, impeachment has nothing to do, theoretically speaking, justice has nothing to do with what is going to happen with you, in any case, theoretically speaking, of course, right? Not practically speaking. But, I mean, this kind of a statement is, that isn't something that somebody should say because I don't see how it helps, you show up like somebody that is innocent. I'm not saying he's innocent or guilty. I don't know, and I don't care at all. I'm saying that this is not a statement that somebody should make just to point out that he or she is innocent, because it doesn't look good. But anyhow, Trump,
it doesn't inspire confidence. Yes, you're absolutely right.
Yeah, for sure. But whatever.
But anyway, it is what it is.
Speaking of risks, so we can start going over some charts, and I remind you that we don't have an interview. So if we need to, spend 10 more minutes or whatever, we're going to do it. Speaking of that, let me show again, because this is what I've been seeing in NASDAQ for a long period of time, this potential ascending wedge. You can see it here. As you see, the NASDAQ is perfectly ascending line, which in my opinion it has a very high probability of being an ascending wedge support. So as long as that's the case, we still have a bullish run, which is uninterrupted. But there are two areas that I'm focusing more. One of them is this area like 7,565, where we have a confluence of 161.8 with 141.4 of this move lower and that move lower equivalently. And the other one is higher, which is the 161.8 of that move lower, which was like, the last decent kind of a corrective move we had lower, which comes higher, and, which should also confluence, in a week or so with this ascending trend line resistance, which is, the potential wedges resistance, which comes at 7,740. So, I would be looking forward to seeing a move likely up there, and a failure, would get me very interested to actually shorting the Nasdaq. But anyhow, don't dismiss the possibility that this can just break below this trend line, and even if that doesn't prove to be like an ascending wedge with whatever implications that has, which will be very bearish implications, because theoretically speaking, a wedge when it breaks should at least retrace the whole length of the wedge, right? So that would point to at least a move lower to 6,300, which is like more than 1,000 handles from where we are. It's like 1.1K handles lower. But even if that's not like an ascending wedge, so it doesn't retrace all the way to that, it still is a very reliable ascending trend line support. I mean, look how many times the market has tested that: 1, 2, 3, 4, 5. And, the last few days it has been retested another couple of times. So we've been testing this trend line support since April. And so far it has been holding every single time. But there is an obvious, even if you see at the price action here, there is an obvious loss of momentum. You can also see that in the RSI, because there is a clear divergence in the RSI at the same time, which makes perfect sense, since the RSI is in essence a momentum indicator. So bottom line, I would be very skeptical here, right? I'm not ruling out another push higher, as I said, but I do think that the Nasdaq looks like it's running out of fuel. Okay. Now, if we switch to the IWM before I go to FX, I was looking at this recent consolidation as a triangle, and I said that it can either break higher or lower, of course, but it should extend when it does that. As always, I keep saying that whenever we see a triangle, you expect that the chances of it breaking in the direction of the trend, which means higher in this case, are a lot higher than breaking lower. That's exactly what happened. It broke higher. But what we're seeing here, and let me move this around there, what we're seeing here, and let me zoom out so you can see it, is that, yes, we did break above the triangle, but we are getting now very close to testing this ascending channel. As you can see that this ascending channel is here since the end of 2015. So it's a very, very solid technical formation. So we are approaching that trend line resistance. And at the same time, we are approaching the trend line resistance of a previous channel that the market was following for years. You can see it here if I zoom out. There it is. So this is a channel that was holding since we found a low in 2009 until we actually broke below it in 2015. And then we formed another ascending channel. So extending that previous one, as you see, comes and confluences roughly with the current channel a little bit higher than where we are, right? So they both confluence in a few days, roughly at 174, 175. So yes, the IWM, the Russell remains bullish. We had a bullish breakout from this triangle, but in my opinion, you should be cautious. Of course, there is still no reversal signal, but personally, I would be looking for the next big move to be lower here as well, instead of being higher. So I wanted to point out those two specific indices because, in my opinion, from the US stock indices are the ones that have the clearest technical structure. And another one I wanted to show is the Nikkei. Why? Because the Nikkei is stuck in what seems to be a triangle, right? But the triangle's support is quite an important trend line because if we extend it back in time, we can draw it from June 2016 low to the recent low that we had, and obviously we seem to be consolidating. So it's quite obvious what's happening here. Either a break below this 22,000 area or above the 23,000, which I've been saying for a long time now, is going to be indicating where the next move will come, in which direction the next move will come. And, I don't want to take any, we're in the middle of this triangle, or if you want to see it as a range of this range. So, I wouldn't be taking any position. But for me, knowing how important those two levels are is quite important, because I do think that when we finally break out, that will have a lot of implications. And knowing how the yen can act in times, especially if this comes as a big risk of move, I would definitely take it into consideration in seeing how to trade the rest of the markets in general. So that's what I wanted to say about risk. So let's go back to Forex. And mostly I want to start by having a look at the Aussie pairs, because we had a decently big move in the Aussie. So let's have a look at the Aussie pairs. And Stelio, do we have any questions, by the way?
We had a question on oil, and now we have a question on dollar ZAR, the rand, basically.
Okay. So yeah, Blake said that before. So let me start by having a look at both crude and gold, and then I'm going to go to the Aussie pairs. So nice rebound from crude. Personally, I'm still not convinced that the move lower is done. We did find support though in the 200 DMA, and I do believe that the trend remains higher. I just don't believe in the short to medium term that we're done moving lower. So I'm a little bit torn here. I mean, since my medium to long term bias remains higher, I don't want to be pushing, the bearish case too much. But on the other hand, I would still be looking for a move towards 63.70. So I still haven't seen much to be convinced that we found the tradable low. So I still remain cautious. I mean, only above 70, I would be considering the move to the downside as done. Until that point, another failure and another push to the downside remains my preferred scenario. Okay. Now, having to do with gold, and gold is actually a very at a very critical point here. Why? Because we were looking at this chart the other day, and I said that, listen, we have a very nice bounce so far, but for me, for anything to actually happen in this market and start looking for a lot more upside, I want to see a break above 1206, because 1206 was previous support. You see here, the market was holding that area for like 4 or 5 consecutive days. In what proved to be price action was also very apparent, but it also proved to be, in fact, bearish consolidation. And at the same time, that would guarantee that we would see a break above this descending channel. So this descending channel rejected price action once again. We are retesting now the horizontal support area, which is around 1190. So I'm not saying that that's it, gold failed. Gold is going to be moving lower towards my next target would be the 161.8% extension of the previous bull run higher, which comes at 1158. So, I'm not saying that we're going there yet, because we might see another push higher following tomorrow and whatever happens. And, we might finally break out and move to the upside, in which case I think we're going to, if we clear 1206, I think we can easily push above 1230, if not higher than that. But I'm saying that, don't jump the gun. We're still trapped within a descending channel, which is bearish. We're still below that long-term ascending trend line support that has been broken. Let me zoom out so you can see it. There it is, this one, the blue one. So you have to keep respecting the downside until we at least break higher from here. Okay, so I think we need confirmation. Until then, nothing much to say. Silver, same kind of thing. Look at this. Silver actually didn't even make it to this descending channel of resistance. It failed lower than that. But as I said, that doesn't mean that it can't move higher again and break above the channel. But one thing is for sure, until or unless it breaks above this channel, I mean, what kind of a technical pattern would I be pointing at and saying, no, this thing has bottomed? I mean, I can say it has bottomed only by using, let's say, intuition or gut feeling, but this is not the way I want to be trading, right? So if I have to give some technical explanation that any of those have bottomed, I don't have to offer any. So, that's it. It is what it is. If tomorrow brings, another push higher and we actually start breaking these areas, then we can have a different conversation. And as I said, a break above 1206 in gold is going to get me very interested, because I think that can easily extend to 1232. Okay, but this hasn't happened yet. So until that point in time, I just have to, to keep looking lower. Now, let me go through the Aussie pairs, because first of all, look at the rejection that the Aussie USD got yesterday. There it is, right? Triangle, break lower, perfect tag of the 161.8% extension of the triangle's range. Rebound, retest of this broken triangle support, and a big rejection. So also look at the RSI. The RSI made it back roughly to 50, which is exactly what you expect to see in a bearish trend. Bottom line, bad rejection. Obviously, if you're bullish, this is not what you wanted to see. And obviously, if you're bullish, you're running for the exit, right? Now, Aussie Kiwi. I was very, very skeptical about the Aussie Kiwi. And I have to say that I'm bearish. I'm very bearish the Aussie Kiwi for two reasons. Reason number one, we have been trapped in a long-term symmetrical triangle. Let me zoom out so you can see it before I zoom in. So look at this. Long-term symmetrical triangle has been going on since 2013. So this is already like five plus years that has been going on, right? Symmetrical triangle. We came up to almost retest resistance. But what worries me even more is the fact that, and as you see, I haven't changed anything in my drawing since before I left for vacations. I was viewing this as a triangle. I was pointing to a break higher, but I remember I was saying it in a webinar here. I was expecting a rejection anywhere between 111.2 and 111.5, because we had a confluence of resistances up here, which included the following. First of all, the 161.8% extension of this move lower. There it was. Then it was the 78.6% fib of that move lower, which is here. And we also had the quality of the two legs higher. Let me show it. We had the quality of this leg higher with this leg higher coming in at 111.30. Okay. So a lot, and we also had this ascending channel, and usually corrective moves channel very nicely, like in an ABC kind of fashion, right? So we had an ABC perfectly tagging this area that, as you saw, has 4 resistances, and a little bit higher was the 5th resistance, and perhaps the most important one, that symmetrical triangles resistance. We failed here. We are plunging lower in a move that seems to have quite a lot of momentum. So I have to say that I think this thing is going to be moving lower. I think that we will eventually break this 1085 area. And I think that at the very least, we're going to make it back to this symmetrical triangles support. So I do think that the Aussie should remain weak against the Kiwi. Of course, there will be some bounces, right? Nothing moves in a straight line, or almost nothing. I mean, only the Turkish lira moves in a straight line, right, Stelio? So, so I do think we're going to be moving lower from here. So let me erase those drawings and move on to the next Aussie pair, which is the Aussie Yen. I was actually showing, I think, yesterday the Aussie Yen, and I specifically said that the Aussie Yen was retesting a horizontal support area as resistance. You can see it here if I zoom out. There it is. You see how important this horizontal area of support has been in the past. And, you know, we retested it. Nice rejection. I said yesterday, you know, that going back into this channel is perplexing things a little bit, but we still had this horizontal area of support that might act as resistance. So there was still the potential of getting rejected from there. So far, this has happened. And, you know, there's no way I can turn bullish as long as we remain below this 8150 area. So you have a very clear, you know, risk here. Anything above 8150, I think, you know, damages the technical outlook. But until that happens, or, you know, until we see a move higher from there, you have to respect the potential for more downside. It's as simple as that. Now, Euros was another pair that I pointed to yesterday because I said that it looks like that the corrective move is done, and I was expecting for confirmation, seeing this break to the upside, and that's exactly what happened today. So I do think, and this is what we drew yesterday, I do think that especially if we close above 159 on a daily closing basis, this is going to confirm that another extension to the upside to at least retest the previous high near 162 is in the cards. So I do think that we have a technical break happening in the Euros today, and I do think that it should extend higher. Now, Pound Aussie, I'm a little bit less convinced about the Pound Aussie because yesterday I was saying, so obviously, let's start by that. If I wanted to be long the Euro Aussie or the Pound Aussie, you already understand that I would go, you know, for the Euro Aussie, right? There's no question about that. Now, I was saying yesterday about the Pound Aussie that there is still a potential that we're seeing here an ABC, perhaps a retest of these triangles, broken support as resistance, might bring another rejection. So I would be a lot more skeptical. Keep in mind that also at this same area, we find the 50 daily moving average and just a little bit higher, the 200 daily moving average. So I'm a lot more skeptical having to do with the Pound Aussie. I think that Euro Aussie is, you know, a much better bet if you're looking to be bullish. So bearish in essence, the Aussie. And I'm looking to see what's going to happen in the Pound Aussie, you know, if, you know, from here or a little bit higher from here before I make judgment. Okay. Until then, purely if I had only one chart in front of me and, you know, completely not taking into account any other Aussie chart, I would be looking for a resumption lower in this chart. But given the fact that this contradicts a little bit my view in other charts having to do with the fate of the Aussie, I'm a little bit more skeptical. So I wouldn't be shorting the Pound Aussie here. I'm just monitoring. Okay, let me be clear about that. So these are the pairs I wanted to show since we had, you know, big moves in the Aussie. As Blake mentioned, this move lower had to do with political developments we will have a change of prime minister, as it looks like, Stelio, right? Turnbull will be giving his spot to somebody else. What do you think is going to happen there?
Well, not quite. I mean, there is nearly the enough numbers needed to take power from him, but it looks like, I think they need 43 signatures or something like that. They're like 40 or 41. Basically, they're almost there. So yeah, it looks like it, but it's not a done deal yet.
Anyhow, it's more than enough to at least show that there is some political instability at the moment in Australia, and as always, there is nothing that an economy and obviously its currency likes more than uncertainty. And we've seen that with Brexit, with Great Britain and Brexit. I mean, one of the main reasons.
There's nothing it likes less, you mean? Not likes
more.
Yeah,
sorry. Did I say the opposite? Yeah. Nothing that it likes less than uncertainty, yes. And one of the main factors why the cable has been suffering so badly. Not because of the repercussions of Brexit, but mostly because of a lot of uncertainty that comes with it until we finally see how this thing is going to get settled. I think that once the Brexit story is going to get settled, even if that's mostly on negative terms for the UK, I still believe that the pound is going to rally.
Yeah. Okay.
So, do we have any more questions?
You did the crosses. Did you do oil and the USD ZAR? Because you did the
sorry,
crosses.
no, I didn't. I did oil, but not USD ZAR. So
yes,
you're right. Let's have a look at a few of the exotics, and we can call it a day after that. So okay, USD ZAR. There it is. So this is exactly what I was pointing to before I left for vacation. I haven't changed this chart. I was saying that this is a pennant. Pennant should break to the upside, and we should see a move towards 1440. Not only we saw a move towards 1440, but obviously, we had a huge spike, quite a lot higher. So we are now seeing a pullback. I think I should fib this. Looks like a 61.8, roughly, perhaps even more than that. Let me fib this first before we go on. So fib, let's take that high. It's not easy because the screen is small. So let me fib it from a random spot, and then I'm going to move it in place. Okay. So let's now move it in place. 61.8, exactly there. Let's see. Let me also change this so it stands out more. We need only from the 61.8 and further. There it is. So use this ZAR, tag the 61.8, pulling back from here. Watch 1390 for support, but it looks like it might want more, right? So I think that we need to respect the potential for more upside. This looks like a corrective move lower, perhaps an ABC 1392, good support area. I would be very careful. We might see a resumption higher from there. Use the Turkish lira. Obviously, we already had a leg lower. Perhaps we're going to see something like this. Right? But I would still expect the move higher to resume after a period. So let me be clear. I'm not ruling out the possibility. It's quite likely that we're going to see some further strengthening of the Turkish lira, paring back some of the recent losses over time, or a consolidation. Perhaps this ends up being a triangle or something. But in all honesty, it's very dangerous thinking that we actually found an all-time high or whatever else, right? So I think in the short term, looking lower in the USD Turkish lira makes sense. But you should be very, very careful because the longer term view hasn't changed. And let's go to the USD ruble. USD ruble, I was mentioning specifically before we broke out that this looks to me like a triangle, and I would expect it to break higher. That actually did happen. We seem to be consolidating again. I would expect that after a period of consolidation, we should at least get closer to the target. I had said that I'm looking for a rather tight area here because we have the 50% fib from the move lower from the all-time highs, and we have the equality target from an ABC, a potential ABC at 71.17 and the other level at 70.70. So I would expect that. I don't know what kind of formation we're currently building. It might be another triangle. It might be a pennant. I mean, it's too soon to tell, but I would expect that the move higher is not done yet. Okay, so I would still be quite careful. And one more comment I wanted to make about the USD Chinese yuan. The only bearish scenario that I'm seeing here at the moment is the potential, but as I said, this is just a potential, okay, of forming a head and shoulders formation up here, right? Something like this. So there is a possibility that we're going to see some kind of a high here, but unless this kind of a scenario takes place, I would still be very, very careful, right? Very, very careful, because this move higher has had a lot of momentum, seems to be very strong, and I wouldn't be fighting the trend. The only way I would be doing that is if we get rejected once again at any point lower than 690, and then we clear 682 to the downside. If that happens, then I would be looking for this kind of price action that I was looking earlier, perhaps move down towards 671, 672 before resuming higher. I'm guessing that if I actually try to find the target of this head and shoulders just by eyeballing it, I think that the target of this head and shoulders is also somewhere there. So bottom line, only if we break below 682, I would be looking for a move down to 670. Until then, be careful. There might be more upside coming. Anything else that has come up, Stelio, or we call it a day?
No, I think actually we have Michael asking about the DXY. I mean, we've covered euro dollar and all the things. We can if you have 1 minute to have a look at DXY, and then we.
Blake covered it, but I will have a minute at it. I will have a look at it, for a minute, and then we call it a day. So the DXY. Here it is. Whoop. Sorry, open the chart at the wrong window. Here it is. Let me zoom in. So, DXY. Bullish scenario, as I had said, was finding support at previous resistance and then pushing higher once again towards 61.8, right? This didn't happen. We've already slipped a little bit lower towards 95. 95, though, is also quite a strong horizontal area of support. As you can see here, it was a resistance. It can act as support. As long as we're holding this ascending trend line, there is still the potential for seeing another leg higher. But if we actually do slip below this, and especially below 94, which is going to constitute for the first time in a long time like a lower low, I would be very, very careful. But because I think that if we lose 94 and move down towards 92.70, it might happen very fast. So, technically speaking, there is still a reason why you would remain bullish and be looking for a move towards the 61.8 from the high that we saw at the very first days of 2017. That's at 97.87. But if we slip below that level, perhaps that can happen tomorrow. With the event that we have, with the event risk that we have, then I would be looking for at least one more leg lower towards 92.70, if not much lower, right? Because if you remember, since the very first days, first couple of weeks that we started rebounding higher in the DXY, I had indicated that, people were initially looking for targets that were like at 92, 93. And I said that, listen, you know, there is a lot of positioning for dollar short. I think that if we start squeezing higher, the index can actually make it higher than people believe. It can make it all the way up to 94.50, which was an area I was looking for. It can even make it to, you know, to 96, 96.50. So, you know, we made it there. So going back to my initial comments a long time ago, I have to remind you that I'm not a dollar bull. I'm a dollar bear, right? So, you know, for various reasons that, you know, are not only technical. So I wouldn't be surprised if we find out that this is like a, you know, longer term high that we're finding here. But as always, I'm taking it one day at a time. And definitely we don't yet have confirmation that this is like, you know, a medium term at least high. So, you know, simply because this move higher hasn't been broken yet, right? We still have a series of high lows. So let's take it one day at a time. Let's see if we're going to, you know, manage to hold that following tomorrow's event risk. As I said, if we don't, I will be looking for 90 to 70. And, you know, then we will, if that happens, we start judging on what kind of structure, what kind of a momentum, what kind of technical formations we get from the market to start determining if there is more upside left and that's just a correction to the corrective move higher, or something totally different. If it feels impulsive, if it feels like actually the recent high is a tradable high in the medium to long term. So thank you all very much and see you tomorrow. Tomorrow we'll have quite a lot of things in our hands. Thank you very much, Stelio.
Thank you, Steve. Thank you. Have a good swim or whatever you're going to do. Thank you.